Good morning, everybody. Mike Vacchi, PrincetonTrader.com with your Tuesday morning pre-market webcast. Okay, so, daily chart of the ES, and it's more of the same. We just keep extending. I want to keep these fibs up just for a minute because I really want everybody to understand how extended we're getting. There's no meaningful fib pullback. If you're looking for a 38% retracement of the overall move, that's back at 1626. If you want a 38% retracement of just the move off to 53.25, that's 1631.27. So you can see how extended we're getting up here. That said, I was telling my members, being extended does not mean a reversal. It does and it doesn't. Yes. Markets become extended. They will continue to be extended and extended and extended, and eventually they will reverse. Everything eventually reverses, okay? The issue is, when do you start looking for the reversal? Is it as soon as you in your mind think that something has become too extended? I put out on Twitter last week that in markets like this, what you see, and I'm guilty of it too. I was playing around yesterday trying to get short this market, and I ended up taking a scratch and taking one for a handle and a quarter at the close, just because it just didn't, it's just not ready yet. But what I'm not doing is throwing a ton of contracts at it because I think it needs to go down. That is just, that's not the way to trade. You see a persistent bid on the chart, but your head says that the market's extended and it's time to go down. Okay? You need to stick to the chart, stay out of your head. Okay? Now, that said, we are getting to the point now where we are extended enough off of the middle band that as we move up into a retest of the 85 area, if the bulls are going to make any kind of a meaningful move up into the 1700 area, they're going to need to pull back and reload a little bit. You start to get the feel, and you're getting the feel now. We're not getting the gaps up that we were getting before. Things are tending to be a little bit more flat. The up moves are slow, and there's just not a lot of interest in running the market up. I still believe that if we make new highs above 85.75, that yes, we will pull back, but that will pretty much seal the deal on printing 1700 in this market. So, from an intraday perspective, what's been working? A morning dip that gets bought and ground higher throughout the day has been working. I would expect that to continue today. I think this morning will be a little bit volatile. I think we'll make a high, but then we'll make a low. But I expect the market to grind higher into the afternoon. If that grind higher becomes forceful, and what I mean by forceful is we really start to break out, you start to see some ticks, you start to see some fear, then you can begin to start looking at potentially getting some shorts on in this market. But unless all those parameters are met, you really just have to bide your time, because the one thing this market is not doing, not even close, is taking out the prior day low. It hasn't even tried for the last 6 sessions. Hasn't even approached it. Versus oil, where it's tried to do it 4 days in a row. Okay? So, little dynamics to look at in the market. Bottom line, we are in an uptrend. We are riding the Bollinger Band. We will reverse at some point, but trying to anticipate that is a very dangerous game. For now, do what's working. That's buying a morning dip and watching it grind higher throughout the afternoon. When we start to really spike and you see some ticks and you see us breaching that upper band, then we can start to think about trying to catch a short for a move back to retest some of these lower levels. That lower level for me certainly is 1650, which is this high, which was then tested and we broke above. That level, 1650, needs to be retested. Okay, everybody have a great day. Mike Vacchi, PrincetonTrader.com. Come join us in the chat room. Check out the website. Look forward to having you. I'll be back tomorrow morning with another webcast. Trade them well, everybody.